In this corner, we have hardware, the heavyweight champ of the world, undefeated, going up every day, making Dennis regret some sales he made yesterday. I don't think he's going to regret them in a couple days. And then software. Holy mackerel. Well, Fastly, not falling into that caddy, but the dog, the data dog, bringing software to life. Oracle along for the ride. Is it just a don't like the term dead cat bounce, but that's what we have to analyze it today. Earnings. Not from your super big stocks, but we do have some super big moves to discuss. Always a special guest at 8:15. The one and only Kenny Glick. He'll bring us comedy, entertainment, and information. And he might talk about that VWAP a little bit. So it's Thursday. The Bears, they're taking the day off again, folks. But we're here. Pre-market prep starts right now.
The volatility right now is really incredible.
Wow, look at that consolidation on the upper right chart.
You know what we've seen this earnings season? Some of these expected moves get even more violent. And this is why I have switched my strategy 10 years ago. And if you're chasing, you're in trouble.
All right, taking a look at the charts here, brought to you by TradeStation. Born to trade, chart, analyze, customize, all in one platform. Trade smarter, move faster, and stay in control with the platform built for traders, integrating AI into their trading. Well, shocker here, up 6.5 handles, 73.96. We did exceed that high from yesterday, just about hanging out mid-range on the session. The buck down a dime, no clear pattern here, trying to regain that 50-day. TLT, a little bit of a bounce yesterday. That's kind of out there in no man's land. USO down again. Well, we won't talk about the war much today. GLD down 420 or up $4, 435. I don't know. That's in no man's land too. SLV up 319. That's 2 days in a row. The SLV has been outperforming the GLD, up 321, 73.34. And Bitcoin's trying to find a sustained bid in the 80,000 handle, but it's down a little bit today, down $700, just above 81,000 in the futures. So let's bring Triple D on and software. Is it climbing? Is it climbing? And then it's going to be whack-a-mole, whack-a-mole, whack-a-mole? Or are we finally going to get a bounce?
At least for one day, and it wasn't yesterday, but for this morning, software stocks are winning in the pre-market. Now, we don't know if that's going to work out. You know, obviously, when you have this fight, I like the analogy used in the intro there, Joel, hardware versus software. I mean, even, the other fighters, that are underdogs, they have a round or two. What's having a round here this morning? Because the IGV is rip-roaring higher. We're going to break down why that is the case, up 2.19%. And what we've been talking about, it is not hardware and software. It is hardware versus software. So when software is having a great round, which it is this morning, up 2%, of course the SMH is down 1%. That's just how this market works. It likes to stay in balance. Hardware ripping, software dipping. Software ripping this morning, hardware dipping a little bit. Is it sustained? Is this, the turnaround story for software right now before our eyes? Well, that's to be determined. Let's bring in the Brent Slava to also opine on hardware versus software. Is this the software bottom? Look into your crystal ball behind you, Mr. Slava. Go there. Tell us. Ask it the question, has software bottomed?
Has software bottomed, crystal ball? Says, remains to be seen.
Oh,
we're unsure.
I was going to get the answer right there. Okay. So why? Why is software up here today? Well, there's a lot of software stocks that reported, and they're actually pretty good earnings. AppLovin's bounced around. I don't want to start with that one. I want to go to this morning and start with the Dog.
DDOG.
Datadog, because Datadog is rip-roaring and rallying like it's 2020 or something like that. It's up 23% here this morning. Give us those earnings for DDOG. And why is the market so hot for this software name?
Bottom line was solid, 60 cents versus 51 cents. The sales, in my opinion, though, were really strong. They reported sales 1.01. Analysts were down around 960 million. Their Q2 guidance was solid. They're expecting earnings 57 to 59 cents. Analysts at 50 cents. And then they raised their 2026 earnings guidance pretty substantially, almost 30 cents from 208 to 216 to a new range, 236 to 244. Analysts are down under 220 for Datadog. Shares up more than 20% here. And for whatever reason, right when Datadog released, for whatever reason, I saw Snowflake, SNOW, and also Oracle shares. They seem to respond right away. I don't necessarily know the correlation with Oracle and Datadog, but
Cloud.
seemed like they
Yeah.
moved. Cloud.
Yeah, cloud names. Throw them all in the cloud. So every dog has its day. Datadog having a day this morning. First, technicals on Datadog, then we'll get into some of these peers plays.
Okay. Well, we're double the expected move of $17. So that spells some trouble here for the option guys, right? They're going to have to keep buying and buying and buying. The high is 184.80. I'm not going to say that it's not going to get back to that level. A lot of people getting a lot of money back here. A lot of option traders that even bought the, 160, 165, 170 calls. There's, I don't know, 170, you're probably breaking even with the premiums in here. So I'd watch the early price action. There's really no daily level. I say 180 would be my level. Like if I felt like I needed to get rid of some stock today, just on a short-term trade, I would look at this 180 level. The only reason is you have a pair of highs going back at the end of November at that area, but in no man's land like so many other charts.
Snowflake starts blasting off on this report too. It's been in the gutter. It's sitting not too far from its 52-week low. While this morning we're not talking about 52-week low. We're talking about stock up 8% here this morning. So when it barks, it snows, rains, it snows. SNOW, what's up?
It is. I mean, same thing. Nice move. The sympathy move. So we all know, you want to watch the dog to see, the price action in snow. Longer term, you got a ways to go to 156.63. And that's just to reclaim the 50-day. Before we move on to our next earnings report, Dennis, you know how I always love to give you like exotic spreads and exotic trading ideas?
Yes.
And I know this is not an investment advice, but what do you think of a spread? And you know what the spread's going to be. It's going to be short SMH. Let's say, one lot, and then long 5 lots of IGV.
Michael Burry likes this play. This is the Michael Burry playbook here, contrarian station. I'm not doing it because I think there's a longer-term secular trend here of Anthropic really murdering software names. So I'm not calling for the IGV turnaround story, unfortunately, here. I think, this place looking good, get above 90. Could we continue the rising tide lifts all ships thing happening here? But I don't know if it's the end of the road for all the SMH. But with that being said, I did take some profits yesterday on a number of stocks. I had Micron. I sold a piece of my AMD. I feel like there was like 3 or 4. I sold Qualcomm. I sold a bunch of stocks yesterday, and people are asking why. Like there was a lot of pushback in the STN think tank when I was, selling some of these stocks. And the reason is we've just gone so far so fast. I mean, AMD is up over 120% from where it was 1 month ago. This is the biggest move maybe AMD's had in like decades. Micron. I bought Micron because it was a consolidation station at $485 6 days ago. It hit $666 yesterday, up 40% in 6 days. I mean, what I was saying is, and then Qualcomm, which has been the dog of all dogs, and I've had this for a long time, but the same thing. 1, 2, 3. Here's a stock that really has gone nowhere for years. And now all of a sudden, in 9 days, goes up from 132 to 192. You're talking about a stock going up almost 50% in 7 days. This feels like upside capitulation. It feels like, okay, now we're getting into nosebleed territory. It feels like a ring the register moment. So is this the top? Nobody knows when the top is. This is the hardest thing to call tops. So I'm not trying to say short SMH and call tops like Michael Burry or Joel Elconin was advocating for. What I'm saying is, when your stocks go up, your dogs like Qualcomm go up 50% in a week, sometimes it's not a bad idea to ring the register. Do they continue? Maybe they do. Maybe they continue to go up forever. Maybe we're just in this, bull market's going to be rampant, and obviously AI hardware is still needed. But there's also the possibility that you get a pullback. There's also the possibility that you get a check back. These are big moves, folks. What do we do in your stocks? I'm a buy the dip, sell the rip kind of guys. These are exceptional rips. That's where I'm at.
Okay, I just want to be consistent with my levels here in the IGV. Real quick, Dennis, I just want to throw this in here. Been talking about this level for a couple weeks now. I'm going to save my layout for sure. I mean, this area, this $89 area is where you pull on the way down. It just caught a really bad day. And then we see this pattern here forming a base above the 50-day, 200 days way out here, but it's trading up $1.92. Of course, it doesn't give you a chance to buy it going through 89 in the regular session. But I'll say at longer term here, over the next couple days, man, if we can build a base here at that form of resistance, they don't give you bases, they just take off and go crazy, then I will be able to, I'm going to call a major turnaround here. I'm finally up on my Oracle position. It's one of the only stocks that I've ever doubled down in my portfolio in, which I've never done.
Even though you advocate never frown average down.
I had to. I had to.
This was so ugly. I had no choice but to double down.
I wasn't selling it. I wasn't
Spoken
selling
like
it.
a true trader. That's
and I never look at prices like in my long-term port. Like I just get in the price. That's it. I don't care. So the first chunk was like 197. Okay. The second chunk was 141.72.
Wow, you bottom ticked it.
Yeah. Pretty darn close.
That was a good buy. That was like my Netflix buy. Remember, I quadrupled down on Netflix. I bought at 330, and then I quadrupled down like 175. Then that ended up a huge winner. That works sometimes.
That averaging down strategy. I'm selling it. Never.
You never sell anything.
Never sell it.
Never sell.
So when it goes back down to 130, you guys can laugh at me.
When it goes back up to 330, you can laugh too.
I know we're going tangent here, but just say Oracle. Okay, they had that big boost, right? Because they were going to make like $100 million, right? Whatever. And they got the move, and it was way overdone. And I'm thinking, well, if this comes back down to where it was before, they still have these other earnings. Well, they killed it, and it went down even farther.
Software apocalypse. Got it.
Yep.
Don't we just all need Elisa in our lives?
No, she has nothing to do with the double down. This is
but she'll have everything to do with you not being able to sell it. And that's why you
this is one that she doesn't. No, I will say she talked me out of selling this Microsoft at 350. I was puking my guts out, and she said your famous term, Dennis, about the AI. They'll figure it out.
They'll figure it out.
Yeah.
If anybody's gonna figure it out, it's Microsoft. I'll give you that.
Yeah.
Okay. So we got Oracle flying here this morning. Let's just talk Oracle technicals just for a second here. Stock has come back. It's reclaimed the $200 level. I'm long Oracle too, just a piece, but I had sold and cut some of the loss there a while back. Actually on the way down, I think I cut out around some at 200 or 220. Should have doubled down like Joel, and I'd be whole on this position here now, but not the case. I don't know. Like software is bouncing back. I still don't like software because you got, this little thing called Anthropic and Claude in the background that's still in its disruptive phase. Maybe it's like a toddler, right now. So, toddlers like to break things. Maybe eventually, it grows up to be like a good human being, Claude, and,
that's a good analogy.
Keep breaking everything. But right now, it's in a really destructive phase. It's like throwing things, breaking things. And unfortunately, software is low-hanging fruit. It's just breaking that. So that's the issue with me and software is we still got this toddler Claude that's still in the disruptive phase of its life. And they said yesterday, we're going to Kenny on here in a second. We'll kind of let him come into the conversation here. They're estimating Anthropic valuation in the private market is now $1.2 trillion, which is up tenfold from where it was last year. So, I mean, Anthropic is just eating a lot of lunch. I don't know if that changed, but at least, for a day, software is starting to show a little bit of life. Can we go get the Warlock?
He is not at his desk. He might be going to get his Morningstar or something, I don't know. Well,
oh,
yeah.
Okay.
Remember that one time he came on with the Morningstar?
Yeah.
The weapon?
Well, you never know what he's going to come up with over there. So I think he's
Kenny.
back, though. I think he's
Kenny,
back.
are you good? Kenny
he's adjusting.
looks.
He's always
Kenny's good. Here we go. Let's go get Kenny.
Good.
Wait, is this AI Kenny or is this the real Kenny?
I don't know anymore, actually. What's up?
Actually, that's a good point. Are we all AI? Are we in a simulation? I heard it. Let's Know podcast was over an hour, and it was a really good point that we're all just in a simulation, and this is all just like AI. Like that could be the case. I mean, that's a hard thing.
That's a whole different show, but if you really want to have that conversation
at 8:50 in the morning,
I truly do believe that. So I'm not a religious guy. I'd actually more inclined to believe that we're in pods somewhere and this is all fake. That's why I treat the stock market as this is definitely not real. I mean, I don't even believe that life is real. And especially after what we saw from March 31st until today. I mean, seriously, come on now.
Yeah, this is all just like messing with us. Somebody's playing the video game. Watch this. I'm going to do this whole like oil, close the straight, and then we're going to just rip stocks like never before, and nobody's going to see it's coming, and everybody's going to be like, what the hell, man? And they're all laughing at us, the people who have created the sim. It could be the case.
The one thing about this move, it proves my conspiracy. The market is socialized. It's taken over by the government. On March 31st, we had a power gap in the middle of the day. I hadn't seen a move like that since the tariff 10% candle. And then it was confirmed on April 2nd. I got right on the internet. I said, we're back. We're going to be at all-time highs before you know it. I didn't think it would be in 3.5 weeks. But once we broke 602, which was a pivot point from February, it was on. And you could see the buy programs hitting. And then the switch was just flipped. And it is just, this move just proves that whatever you're going to think controls the market or makes this market go is wrong, because nothing's got better. I could give you the 100 reasons why we were going down from February 3rd till March 31st, and all of them have gotten worse. Every single reason. So I don't want to hear it. But you know what? Like I've been saying since you guys met me, shorting is short-lived, and you're going to die. So, I mean, it's this is it. This is it. I left in those 3 days where I just was a little bit in denial first. I left countless amounts of money on the table. And then just a couple of days ago, just trying to get in front of this move, just to try to play a pullback, I got steamrolled even up here. So, wow. I mean, it's incredible. Yesterday, playing a fade in AMD, I can't believe it even worked. Woo, the stock sold off at 10% there at the open. So it is, it's something to behold. It really is. I thought I was done saying unprecedented or flabbergasted, or I've run out of, I have to get the thesaurus out for what I'm looking at here now. So just
Kenny, too. I mean, you were bearish going into the March expiration too. So I don't, people need to fully understand. He talks about the market very open, like Dennis too. I mean, looking at it from both ways. And I can remember you came back from Iceland, and I know you kept some of the shorts on, and we had you on, and I could just tell the market had a big bounce. It was one of those times where, we were 100 points lower in the S&P, and you're thinking, boy, I wish I would have been, I had that opportunity. But you were like, instead of waiting for it to go back down there, you were like, I got to get out of this stuff. I got to, I missed the capitulation bottom, but like what, what was your see? Like, what made you feel that day? Because I could tell, I was looking in your eyes, you trade, I know you're trading, you're doing things, but I could tell you were like, okay, I missed the bottom here, which we all feel that, what was it, your VWAP? Was it points on the daily? I mean, because you were flipping the switch. I don't know if you were able to get long that day, but you definitely, to me, when I was looking at you during the interview, you were like, oh boy, whew. I was looking for that flush. It was 100 points lower, but I was in Iceland in the car.
It's like I was saying, March 31st, I could show it on the charts. I mean, but it's a power gap. You could see it. There's a buy program that hits. And right there, if you guys watch me on TikTok, I did a video called We're Back. We're back. And people are like, what are you talking about? I'm like, that's it. The bottom's in. With the government stepped in. They said, no more of this downside. And that you could literally see it. And then we gap the next day over what might have been resistance, just like we saw last April on April 3rd. And then we had another one on May 12th. We just gapped above resistance. That traps the shorts because they're still debating whether they want to cover, like me, and also the longs that were debating whether or not to get back in. So now the shorts are trapped and the longs are left wanting, and that's how these moves get created. So, and you have to just join in. I mean, it's hard right now. There's nothing I want to do than short the market right now.
I know.
But you can't. You can't. It doesn't make any sense right now, but I'm just, because at this pace, right? Just at this pace we're on, if we just keep going, the QQQ will be at $1,000 on July 4th weekend, which is
it's been that violent. Like
right.
The rally is so violent.
Let me put it in perspective. So just expand on this move. On April 20th, on April 20th, 2028, I predicted the Qs would be at 1,000. April 20th at 1:43 p.m., by the way, on April 20th, 2028. According to the move we're in right now, we'd be at 28,450 at this pace. So I might have to raise my targets a little bit here, fellas. I don't know what we're watching here. I mean,
what changes the narrative? What gets the bears back out of hibernation here? Because they're fully in hibernation. They're scared. Many of them have been shot dead here. I mean, this is like if you were bearish a month ago and you were underweight, even if you're a money manager and you just have a lot of cash, like Warren Buffett sitting there, now I guess it's Greg Abe with 40% cash. I mean, what makes them start winning again? What turns this narrative? Because like the straight is probably going to open. I mean, we're rumored about it all the time when we're up so much. I mean, even if it stays closed, it doesn't appear to be going down. Nobody cares about the war anymore. What actually changes the narrative for the bears to start winning? What's the risk factors for the bulls?
You want to listen, I don't even know if we can get a pullback that lasts more than 7 minutes, but we have to break a prior day low. We haven't even do that. That's why this has been an easy move to swing, because if you just play by that simple rule and don't sell unless you break a prior day low and then use your stop at the another prior day low, you're still in this move. We haven't even tested prior day VWAP, which is like, you usually just test that just based on ebb and flow of the market. We're just doing this. We're doing this and pausing and doing this.
Yeah.
When you see something break a prior day low, that will be a trend break. We can't even get that right now. So that's the first thing I'm looking for. And of course, the volatility product, my lot, the UVXY, just drifting down. So if there's ever going to be a switch here, just a little profit-taking event would be welcomed. You know, the Qs have gone from 555 to 696, basically, without even taking a breath. So, give me a 15, 20-point pullback. You could have your bull market back. I just want something to do here. I'm just sitting here in awe, really. It's absolutely incredible. It really is.
Like, I mean, you look at the hardware names too, and obviously you talk about taking a short on AMD, which sounds scary as well. I mean, I just sold some of my hardware names yesterday because I'm like, these moves are so astounding. I mean, I bought Micron for a swing trade at $485 6 days ago. It hit $666. It's up 40% in 6 days. Yeah. I mean, if I'm not taking profits into this, I don't know what, but I'm scared to hell to short. Like, I mean, I give you some guts, shorting AMD. I'm scared to hell to be short.
Yeah. You're just playing these fades, pre-market. You had a 15-point pullback through VWAP. That was it. And you actually had an opportunity to short AMD yesterday, which was unique. But To your point, it is just, it's otherworldly right now what's going on. But, again, back to being a day trader, I found some opportunities yesterday, a couple of names I gave you guys. So the photonic stocks are still just absolutely crazy. The scary part is now people are talking about photonics. I've been talking about it for about a year and a half now. And, I walked in yesterday and one of the stocks that we had just recently took profits on was getting hammered, ATOM, if you guys don't know about this one. And you walk in, you see the stock's getting hammered, and somebody said, man, good thing we sold it. The earnings were awful. Buy it. It doesn't matter. Buy it. It doesn't matter. He's like, why would you want to buy it back? The analysts are downgrading it. The earnings were terrible. It sounds like the company's going out of business. I don't even know if they make any money. Buy it. Those are all the key phrases I want to hear. Buy it. So we bought this thing in the pre-market close to $6, and it went to 10. That's not how this, you're getting stocks that go from 6 to 10 just on little tiny squeezes. So, and I was looking at I was trying to find something that wouldn't go up. And I looked at this company, BRBR. You know about this one? Health food drinks yesterday got slammed. This is one of the only stocks that actually been trending down in this market.
Wow.
But yesterday they reported earnings and they were terrible, obviously. And same scenario. Buy it. It doesn't matter. So you buy the stock at like $10 and it rips 12%. Bang, cash. So there's still opportunities to day trade around the earnings reports is what I do best. But man, I've been telling people, do less right now. Just own the cues and let's see how this all plays out. We're probably going to 702, which was the short-term target. We're 6 points away, which is unbelievable. But I'm almost speechless. I really am. That
was yesterday. I got, that in the news too. We got the war. The war has been over so many times. And the deadlines, but we're just putting that out. But let's talk about today and give us the old Kenny 1 minute VWAP setup here. We do have a software name that's in the dumps, had a nice run. Fastly. Here we go. I pulled up the chart. You can pull up the chart if you want. But, down 772, down 767 here. Just tell us if you're looking at this one. If not, maybe some pointers out there for.
Well, physically, this was a stock that actually started this monster move. I remember back in they had this blowout quarter, and there was a gap and go. So this is kind of like the flip side. This is a no-brainer. This is like the same example as I've been giving. Anytime you see something down right now, you almost have to assume it's going to be bought, right? So again, I see this thing down here under VWAP, and I'm just saying, okay, when's it going to $28? As long as it doesn't break back under 22.50, this is a perfect scenario, right? So you're right in between that 22.50 and that 25. Your VWAP's smack dab in the middle of 24.25. So again, with every trade, again, by the way, I just want to throw this out there. When I'm on these shows and we're talking about all these things, nobody knows what these things are going to do. But what I do best is I find stocks or trades where the risk reward is consistently in my favor. So I know, okay, I could risk 50 cents to probably make 3. And if you stick with that scenario for every trade you put on, even when you're wrong, you're going to come out ahead. Same thing here. My default is just to buy anything that's gapped down on earnings. So I just wait to see if it hits that pre-market low. If it breaks the pre-market low, you're probably going to the overnight low. But again, I sit here and I wait. I don't even need to know what this company does. It doesn't matter. If it's above 24.25, you're probably going to be ripping 2 points. And for us day traders, a $24 stock that goes up 2 points, that's our payday. So yeah, I got this one on the radar for a buy. Gap down stocks right now, I'm all about buying. And, if I'm going to be playing any fade, I'm looking at short DoorDash, I got a little bit on right now because it was just a monster move yesterday. It's slightly under VWAP now. So it's something like that. If I'm going to short something, it's going to be this. But Fizzling's a perfect example of, a stock that I'm looking to buy today. It doesn't matter what the earnings were. It doesn't matter what the news is. As long as there's activity and something's gapped down, there's a chance there'll be some short covering and some dollar cost averaging, and the stock will go up.
Okay, one more for me, and then we'll let Dennis throw a few at you here. Our own Benton Harbor, Michigan company, Whirlpool.
There's what I might leave alone today. But it is, but you can't, right? Because it's gapped down, and it's actually right now lined up perfectly because the overnight low is the VWAP right now. So once again, this thing breaks 43.85, you're probably ripping to, again, not a big trade, but about 45.20. And if you start getting over 46, chances are you're going to 49 and then 50. So again, even Whirlpool, where you're not thinking tech, because if you're not buying photonics or semiconductors right now, what are you buying? But Whirlpool, yeah, I mean, how do you not look at anything gap down in this market as a buy? It doesn't matter, again, and you're already turning right here. So anything above 43, you got to be bullish on your way to 43 and 43.88. And right now, really, I know you're not seeing my charts, but it is nice symmetry here where yesterday's lows are today's VWAP. So I'd be a buyer. It's hard not to buy.
Okay. Always great to have Kenny Glick, the Warlock, at hitthebid.com on Twitter. If you haven't seen his AI videos, folks, I mean, I don't look at much stuff on Twitter. Okay. But when I see Kenny stuff, Lisa's like, what are you laughing about? And she says, I said, Kenny. And I'm like, I don't know if I should show you this one. But
yeah. I have to, right now, my AI is the only thing that's keeping me from not getting banned on TikTok. TikTok's algorithm does not like me. I'm a free speaker, foul mouthed from time to time, and you cannot use certain words on TikTok. So I do TikTok live. I got about 12,000 people watching me now, which is pretty cool and exciting.
Nice.
But I get thrown off. I'm on my 17th ban right now.
You're always super well behaved on PreMarket.
No, but here this. I don't want to get into this whole conversation again, but I got me in trouble once. I might as well say it. So the other day, I'm just looking for a chink in the armor of this market. And I'm looking for something that will give me an idea that this market's going to go down. A weak spot, chink in the armor. Next thing you know, I'm thrown off TikTok for racist, violent rhetoric. That's a little insensitive there, TikTok. I get it where you're going, but seriously, I can't stay on TikTok no matter what I say. So I launched this channel called Flowers, Love, and Compassion Trading. It's just cats and dogs and unicorns going by while I'm
Beautiful.
trading. It's so ridiculous.
TikTok algo's so happy seeing that. It's so happy.
Peace, love, and trading and compassion. I love you.
I'm so
all.
relaxed with you just saying that. I just got so relaxed. I could just go back and just fall asleep. Okay,
oh wait, hang on.
Make love, not war.
Wait, he's got.
Before we go, then let's just take a moment together. Hold. In the VWAP.
The VWAP.
Oh,
yes.
gosh.
All
right. All right, Kenny, we will let you do your yoga before the open. And
I'll see you guys.
Drink some herbs.
Thanks for having me on.
Herbs.
Good luck, everybody. Be careful out there.
We love you, Kenny.
All right.
See you, Kenny. It's always relaxing.
This is cracking up the whole
time.
So
relaxing.
I wish you guys could see Brett in the background. Like, you can just see him. Like, sometimes he has to get up from his desk and
laugh it off. Thanks, Kenny.
Hey, that's what we're here, folks. We're here to try to have some fun. We're trying here to help you navigate these markets. We're not giving investment advice, though.
No, we don't give investment advice. And we don't know. And to Kenny's point, nobody knows anything. Like, nobody knows for certain whether this stock is going to go up or down. When you hear the person that says, I know, just buy this stock, it's going to be up 500% this year, run, because nobody knows. All we're doing is doing probabilities, like setting trades up, taking chances, taking shots. Yeah, we can anticipate stories. We can anticipate there's a higher likelihood that this trade's going to be in our favor, but we never know with certainty. So all you can do, take Fastly in point here. One of my worst trades last night. I was like, oh, the internet traffic's going to be up. This stock's going to be pretty good. Let's go in, and come in and take a little shot here into the earnings report. And that's how you lose 25% in 25 seconds. So not a good trade. Obviously I come on here lots of times and, talk about my good trades. My bad trades are bad too. Fastly was a bad one. Took the loss on it last night. Unfortunately, because the earnings were, give us those numbers here, Brent, because I am considering throwing this into the long-term account, but give us the numbers.
Yeah, I was distracted there. AppLovin is getting absolutely hammered right here. Fastly
Wow. Okay, yeah, it is. Okay,
Just
Fastly.
got down $20. Fastly, earnings 13 cents versus 8 cents. Sales beating at 173 million versus 170 million estimate. The guidance, they're looking for Q2 earnings 5 to 8 cents. Analysts are at 4 cents. So yes, it is, the consensus estimate is lower than the range, but it's kind of like too close to the range in my opinion. For Q2 sales, the company is expecting 170 million to 176 million, and analysts are at 170 million. So I think it was a case of a guidance bar too high and guidance not super blowout, especially when the bar is too high.
Yeah, that's 6-point expected move, so it is through the expected move here too. I'm with Kenny. I'm thinking about buying the dip on this thing in the longer term account. The trade didn't work out well, but what am I going to do? And you can turn around and go around and buy it. I sold it out of my trading account, but thinking about it in the long term account here still too. The one issue with Fastly, and that's is the issue is software. It is software. It's software that benefits from increased internet traffic, and I believe internet traffic will continue to grow. So I think that's good for Fastly. But we did see a little Anthropic disruption back, I believe it was in early April. I mean, there's that possibility that this could get disrupted too. I don't like having any software in my long-term account. I know software has been coming back, and I still have a little legacy position in Oracle, but I've pretty much de-softwared most of my portfolio. I actually did most of that back in February, which was excellent call because I sold my IBM at 295. I sold a bunch of other names. I even lightened up Oracle back then because heck, nobody was ready for software apocalypse, at the end of 2025. So, I had a bunch of tech stocks in my portfolio. Some were hardware, some were software. I started preaching hardware versus software. So I sold most of my software names and held on to my hardware names. That worked out really well. So, but now at this point in time, that trade's kind of played out. Does it continue to play out? That's still to be determined. But I just don't love the idea of investing in software. You can trade anything, and some of these trades, are there. To Kenny's point, buying the dip blindly here is working right now. So maybe the stock can bounce here today, but from an investing standpoint, it's still hard to invest in software.
There was a buyer out this morning. This thing went did this go sub 22? Yeah, it went sub 22. Oh boy, 22.71. So the dip has already been bought, okay, by $1. And I'm just looking at the dailies, and you had a couple lows in this area, the 23.30, 23.40 area. So looks like buyers have just stepped up over the last few minutes. Take a look at it there. If not, you'll be taking a look at the pre-market low. I mean, look how far away it is from that gap too. This was the last earnings gap, and it's so if you're super extra bearish and you can hold out for a gap fill at 944, that's a long ways away. But right now, just this 23.20, 23.30 area was an area of a couple daily lows not too long ago. So that's a take a look at Fastly.
The choppiest stock of the night award goes to AppLovin because this stock has chopped around so much on its earnings report. Brentster's going to dig in, but this stock ripped, then dipped hard, then ripped, then dipped hard, then ripped, and just dipped again. So, I mean, we're talking not little 10-point moves here, like just, recapping the action, and Joel can show you there. We obviously, had the big, well, actually, it was a dip off the bat, and then, we ripped up to over $500, and then we dipped down to $450. Then we ripped back up to almost $500 again, then back down to $460, then back up to $490, and now back to $450. I don't know if I've ever seen a stock have that many 10% moves in an overnight session. So safe to say, nobody knows how the hell to price this thing here. Give us the earnings here, Brentster. Maybe we'll try to figure it out.
I was scrambling there real quick to see if there was something said on the call chat. If you know that there was something said on the AppLovin call, let me know. The earnings for the quarter were $356, a bit of a modest beat. Yes, I would say actually, yes, it is a modest beat versus the $340 estimate. Sales $1.84 billion. Analysts were at $1.77 billion. They're expecting next quarter sales $1.92 to $1.95 billion. Analysts under $1.9 billion. The company's call started at 5. So if you're zoomed in on a 1-minute chart, you can see that there was some price action last night around 5. But then also, Dennis, you might not have caught this. I don't know if it's moving the stock this morning, but last night around 5:05 p.m., they did do a automatic shelf offering.
And that can lead to an offering. I don't know if we've actually seen a stock offering here, but
nope, we have not. And
shelf.
why?
So they filed a shelf. Just so people
Yes.
don't know, we talk about this in
Yes.
the STM think tank all the time. They filed a shelf, and then that gives them the option to do an actual offering where they're going to raise cash. But you have to have the shelf out there in order to do it. Sometimes companies have shelves out there already. When they don't, they get a lot of times you'll see a company file a shelf and then an offering soon follows. So it spooks the market. Certain companies have shelves out there all the time and they don't do offerings. You know, if they're mega caps, you know, they've just got them out there. It's always an option. But, you know, is Apple doing a stock offering? No. You know, if they got a shelf out there, you know, there could be some debt, there could be some preferreds, there could be lots of things on that shelf. But, you know, basically just think about it as a shelf. And, you know, you can't do the offering unless you've got the shelf there. So
and even more of a little bit of a qualifier for this shelf, it was an automatic shelf. You guys might have noticed that I said this was an automatic shelf. What that means is companies will regularly schedule, it's usually every 2 or 3 years, that they will just automatically file another shelf so that they have the shelf so that they, what they want to do an offering, they can grab it off the shelf and do the offering. Doesn't really look like the stock's moving on it this morning, though, but I don't know. Unsure about that.
Joel, technicals on this one because this puppy's been all
So
over the
okay,
place.
so I haven't done this before. I'm gonna throw something at you.
Yeah.
And I didn't do this very often in the Bright office, right? But if we were in the Bright office with our 25 traders, I would say, don't trade this stock today. Unless you're trading it with really small size and excellent risk-reward ratios, this is an untradeable stock today. If you're super good with your short-term charts and everything and news and earnings, analyzing this stuff, go right at it. But I would bet if you know, I'm going to trade this, you know, I'm not going to, you know, any names, they would say, I'm going to trade it. I'd say you're probably going to lose money. And I don't say it. I mean, this untradeable stock today. Even the pattern. Look at the pattern over, you know, since February.
Yeah.
I mean, you know what the hell you're doing in this thing? I don't know. So that is a very, very long
hard
pass.
Yeah,
This is a
I think you're right, and it's okay to pass.
A knuckleball. This is all in. It's rating out a little bit. You can't hold on to the bat. This is what this stock is today.
Okay. I'm going to give you another one, and I want to know if this one can be traded here. It's ARM Holdings, and ARM Holdings ripped on its earnings report. It was a kind of a contrarian / you know, like reversal type of after-hours session where you had stocks make their initial moves, and then they completely reverse it. ARM Holdings had a huge rip. Actually, it dipped just slightly on the initial report. Believe it or not, it's there. It dipped down $12, $2.25. Then they ripped this thing to like 267. So it was up 30. And everybody's like, here we go again. AMD part 2. Not so fast. The rug pull happens. And when it happens fast. And the stock started to dip and leak and leak and leak, goes red, and then continues to move down here this morning. So ARM Holdings, call it too high of a bar, down 18 points here this morning. Brentster, do you have the earnings report?
I do have the earnings report. They were fine. Definitely not blow away. They did beat, though. They reported 60 cents. Analysts were at 58 cents. Sales 1.49 billion. Analysts were at 1.47 billion. The guidance, same kind of story. They beat, but it was fine. They're expecting next quarter earnings 36 to 44 cents. Analysts are at 36 cents and sales around 1.26 billion. Analysts are at around 1.25 billion. The call, as far as I can tell, didn't start till 5 p.m. So the stock had already rolled over by the time the call was starting. I don't know. I didn't listen to the call. I don't know if they gave some conservative tone, but the stock was already rolling over before the call started.
Okay, so I forgot the spitball. And then who was the guy that had the file in his glove? And when the umpire came out and he like threw the file over to the side, was that Phil Necro? I can't remember.
Kenny Rogers always had a little bit of the tar there too going on. Kenny Rogers, a little bit of touch right there. Let her go.
This is a little easier setup for me, and kind of, the previous day's low is what you need to know. That previous day's low is we're not too far away from there, right? We get back above 220, get back into this session. I don't know where the daily pivot would be, but I'd respect that. If not, have you gotten a gap fill yet here? Easy gap fill at 214.30. Yeah, we're trading right here in the middle. But hey, this thing doesn't reclaim 220 very early on. I expect it to fill the gap, and perhaps even your 2-day low would be a test at 204.32. So let's see if they come in and buy the dip here, but respect that low from yesterday and the all-time closing high way up there at 237.30.
Gonna give loser of the day award not to Fastly, but to Shake Shack, baby, because this stock is down 21% here. Stock is actually just kind of consolidation station here for a while. They do not like this earnings report here. $20 hamburgers, hamburger combos here, not working in this market environment. What were the earnings? What happened here?
Shake Shack, baby. I heard that little B-52s
Shake
reference
Shack.
in there.
Oh,
Shake
you guys. Oh,
Shack.
man, you guys are like in the
Tin roof. Rusty.
You guys are
They
more
did not.
retro than me, and you're 20 years younger. Well, Dennis is 10. Brett's 20. Okay,
Go
go ahead.
Shake Shack, they
Earnings.
did not like the report. They reported break even. Analysts were looking for a 12-cent gain. So that's a large miss. Sales also with a large miss, 366 million. Analysts were at around 372. They did reaffirm their 2026 guidance. The Q2 sales guidance was pretty decent. They're expecting sales 424 to 428 million. Analysts are down around 418 million shares this morning. The big loser trend down about 21 or 22%.
It great support at 80. Unfortunately, you're well below that great support here going out to the weeklies here. So now you got to go all the way down to the tariff low of April 2025 when the stock gets $72.93. That's a good level. I like that level where you all those question marks going on, $72.93. I like that level, Joel. Is it going to get
I'm
there?
up a little bit on you. First of all, Dennis has been complaining about the price of Shake Shack burgers, I think, since we had lunch in the old office. It might have been
So
15,
expensive.
16, or 17. And he was
Yeah.
complaining. I bought the burgers. He was complaining when they were $14. Okay. And now, I will
I complain
say
that you paid too much.
yeah, exactly.
Let me
And Dennis
complain
is
for
like,
you.
oh, look at
Yes.
this,
A hamburger, fries, and a pop, and it was like $14.75. And I'm like, oh boy. I'm like, it's a pretty good burger.
Pretty
The
good
pop was
burger.
the pop. It's a pretty good burger, but I was like, wow, man, that
This
is
is
like a lot of
but
money.
this is the appetite for like all of these fast casual things though. Like we said it about Chipotle, Dennis, and you were like, I just had it. It was good. It was fine.
Ugh.
But like, I don't want to spend $20 on my one meal for a fast casual food. And I think Shake
No.
we're seeing that here with Shake.
Yeah.
I'm seeing a lot of confluence here at this $75 area. Not one, not two, not three, but four lows, like around 76. So we're at 74.47. So I'll give you a zone. Like if I was short this thing and maybe trying to bring it in, I would
I was
say,
short, I'd buy it because you know
Yeah.
what? Like Kenny says, you just cannot stay short very long. So if
Yeah.
I was short, I would cover. I don't know if I have the guts to go long Shake Shack.
No.
There's not a lot of
No.
AI. There's an A in there. I just don't see an I in there, Shake Shack. So I'm like, I don't know. Could they benefit from AI efficiency? Maybe when robotics get in there and they have the humanoids making your shakes and making your burgers. But I think at this point in time, I don't see a lot of AI in there. And I'm into AI. That's what I like my portfolio to be. So I don't know if I have a place for Shake Shack in there.
Oh, and wow, let's just look at these other stocks. Look at Wingstop.
Wingstop, that's a good one too, Joe. Yeah.
Yeah.
That won't stop going down.
No, Wingstop. And again, this is what happens when you have these nosebleed multiples. Like we talk about this all the time. It's okay. When the growth story is sexy and hot, the multiple doesn't matter at all. But when the growth starts to slow, it's the only thing that matters. So once you get that first report where you see slowing growth, get the hell out of your growth stock because the multiples just aren't going to be justified. And they often eventually come back in to a valuation story where you get the value investors sitting below at like 15, 16 times earnings. And they say, we'll come down that. Wingstop, unfortunately, Joel, is still trading at 35 times earnings with slowing growth. That is the story here, Morning Glory. And this is the difficult thing when you're chasing growth stock. So you got to get out when the growth starts to slow. Wingstop growth started to slow a little bit a couple years ago here. Still good. I've never ate there. Have you ate there, Wingstop?
I would like to. I've never.
Are they any in the D?
Yes. Yeah. There's a bunch of them. Yeah. We should go, Jill. We'll do a
There
little.
is so many. I can't tell the difference. There's Wingstop. There's Wing Snob.
I know. There's so many wing shops. Even in my small town where I live, there's got to be like 5 wing places, and they're all good. But I just mean, like, do we need another wings place? Like, how do you differentiate yourself really with the wings? It's difficult. And we might as well stay on this food theme here. Like, you're on the food theme here. You got Mickey D's, Joel, reporting earnings here this morning. And one company that differentiates itself very well, which listens to pre-market prep, because we preached for the $5 combo for a year and a half, and then they came out with the $5 combo, finally came out with the $5 combo, and the stock was just blast off ever since. Now it's come down the last couple of months here. But, the Mickey D's had a really good 2024, 2025, 2026. That $5 combo changed the game. And my kids love McDonald's. I asked the kids where they want to go McDonald's. And, then, the boy will be like, well, can I get a quarter pounder? I was like, no, it's the $5 combo. You really have to get 2 of those, because the quarter pounder combo is like $14 in Canada. But the $5 combo exists. And, so you get a little McDouble with it. I mean, this is the same as quarter pound burger. It's just built in a different way. So no, crazy town. Nobody's buying a quarter pounder. You got to buy the $5 meals. Okay, but give us the technicals here, or give us the earnings here, Brentster, for Mickey D's.
I mean, this is the case of a bar not too high, right? So the earnings were fine. Where I've been saying about other earnings reports today, these are fine. Those were like bars too high. McDonald's bar, stock's down almost 100, 60, $70. They reported 283. Analysts were at 274. Sales coming in at 6.5 billion. Analysts were at around 6.46 billion. They didn't give any guidance. The comps, the global comps, in my opinion, I don't track like fast food or restaurant companies too closely, but the McDonald's Q1 comps were up 4%. That seems strong to me for, a well-established burger brand, the most well-established one.
My dad was right about this stock. Who's going to pay a dime for a hamburger and a nickel for like a bad cup of coffee?
Bad cup of coffee.
Yeah.
Your dad made some good calls.
And television wouldn't make it. I wonder what he would think of AI right now. But another thing on a
it just sold off hard. They must have had guidance or something here, because this stock was up $10. And you can see
the call is happening right now. Yeah.
Yeah, I think the call is going on here, and it just got
here. It is
down.
Here it is. Longer term. Seeing this on BZ Pro. Thanks, BZ Pro. Believe there is an increase of higher cost inflation due to the ongoing global supply chain disruptions. Not great.
Stocks and hardcore downtrends have nice bounces like that. They're usually more selling opportunities.
I was just thinking of that. Look,
2 months of a downtrend here. Dividends good, but I like the company. I actually go there. So
look at that. You snuck over 295 too. But one other thing I remember about this stock, and I think Dana was in the 6th grade, right around when the market melted down in like 2000. And I did a presentation on stocks and stuff. I even had like the disc and everything. And I remember the kids were asking about stocks. I'm like, well, sometimes people just buy stocks on things that they do and places they go a lot. And this one kid goes, I eat McDonald's all the time. I'm like, well, maybe you should buy some McDonald's then. And I think it was at $15. So one bearish call from my dad, one bullish call from me. Serious downtrend here. They keep changing the menus. What about if they start closing stores? I mean,
what? I will tell you, I cannot think of a McDonald's that has ever closed. I do not know of any McDonald's, like individual store. It is
Whoa,
hard to
that's
think
kind
of
of a
that.
good
Like,
point, Dennis.
these things do not close because these things are busy. Our store, our McDonald's is lined up all the time. I know I don't want to go there at certain hours because it is lined up too much. And they're pretty good at pumping them out too. I mean, they're pretty fast at getting those people through there. That's blasphemy, Joel. McDonald's store closing when they start closing. McDonald's, this is maybe a buying opportunity. Joel's thinking they're going to start closing. We maybe actually should come in and buy McDonald's. It's 22 times earnings here right now. I'm going to stop and advocate for McDonald's here in the long-term account because one thing, McDonald's is not going away. And if we go into a place where, you know, money's a little bit tighter in the future for a lot of people, you can still go get your $5 combo. So, you know, at this point in time, I'm just going to say McDonald's 60 points off the all-time high, maybe more of a buying opportunity than a selling opportunity. I'm not coming out here today, but keep it on your watch list, you know, because, you know, we're bouncing around. Let's see what it does from the earnings. It's falling on the guidance right now or something or commentary that you're saying. Let's see where it settles out here. But I would not say McDonald's is dead by any means.
The one closed that it had a fire. And then
the store burned down. So they closed
the store burned down, but they couldn't. Wait, will you let me finish?
Sorry.
They burned down, and they didn't put it back. They put it. You ever had these Savvy sliders, Brent?
Yeah, I like Savvy sliders.
They're good. I'm not a big slider guy. I haven't heard of them.
Sliders are fun.
There we go. Okay. All right. We only got 4 minutes left. That's enough on Mickey D's. Going away of Wendy's.
Let me give a
no Wendy's. No Wendy's.
Let me give a quick heads up, a quick preview. We do have our jobless, not jobless claims. We did have jobless claims at 8:30, but the market didn't react. We do have our Bureau of Labor Statistics jobs data due out tomorrow at 8:30 a.m. Economists are expecting non-farm payroll reading at 65,000 jobs. Private sector payroll reading at 73,000 jobs. We're expecting the unemployment rate to stay unchanged at 4.3% tomorrow, again at 8:30 a.m. I want to bring us over to a discussion here. There was a couple ratings on our radar with the few minutes we have left here. We have the Alcoa upgrade to overweight at Wells Fargo. We have an Oracle upgrade to buy at Arette. But Dennis, when we were talking about this a little bit earlier, you were like, there are no downgrades to be seen anywhere on site.
Not
and
one?
This is a story
There's
in
a couple
itself.
Small ones, but nothing of note. I feel like for a long time now, we're hardly seeing any downgrades here now. And you know why? As much as we're scared to short, the analysts, when they downgrade a stock, it's like shorting a stock. So you might see downgrade to like hold, but you're not seeing these downgrades to sell. You're not seeing, and I'm looking like at the downgrades here this morning, and the ones that stand out are pretty much nothing. Like it's like they got a couple oil stocks on there, smaller firms, trying to find one downgrade, like BKR downgraded at Barclays. Well, the oil and the strait's going to open, so I kind of get that. William Blair downgrading Planet Fitness. So, maybe that's something here, but, there's just, and that's obviously off earnings. So that's just a chasing downgrade there. And hopefully they don't get the closing price with the downgrade and tangent there. I mean, this is just, not like this has been the environment where it's even scary for the analysts to be shorting stocks, meaning like their downgrade to sell is like a short. So, I mean, they're scared too. So we're like full bold ramped right up, bulls on parade here. We are long in the tooth. And there will be a rug pull. They happen quickly. That's why I've been raising a little bit of cash into the irrational exuberance and for some, and that's where I'm sitting. So I think, the analysts are sitting the same way. They're scared to short. I think it'll take like some type of like Kenny's saying, like, let's at least get below a prior day's low or something.
Yeah,
before maybe the analysts have the guts to come out and actually short a stock.
Okay, we're going to wrap it up for today, folks. Hope you enjoyed the show. If you are into prediction markets, and I just have a feeling a few of you are here, we're going to have a special guest in the STN room today, our own Michael Franz, who's been a long-term listener of the show, big-time follower of prediction markets. And this is going to be such a good one. We're going to throw that out on YouTube today. Some of the things he could talk about is predicting the time of day Trump will send his next truth. That should be fun to play.
Wow.
Current and future uses of prediction markets, perhaps some societal benefits. I'd sure like to see that. And he has somewhat of a bullish thesis on Meta. So we'll put that out on YouTube so you guys catch that at 10 o'clock. Tony Pollock, he'll be joining us tomorrow here on Pre-Market Prep after we go through few more earnings and the jobs number. Always fun to be with you guys. Everyone have a great day.